This is Real Estate This Week with Stephen Gasque. 17 years on air and online, helping you succeed in buying, selling, and investing in property. The best real estate strategies out there, just for you.
Welcome to Real Estate This Week. Hi again, I'm Stephen Gasque, and I'm so glad you're here as we begin our special coverage of the spring market. Spring begins March 20th, and with it comes one red-hot real estate market. So first up, an in-depth look at exactly what's happening in real estate right now, where it's headed, and what it all means for buyers and sellers like you. Joining us now is Lennox Scott, Chairman and CEO of John L. Scott Real Estate in the Great American Northwest. John L. Scott Real Estate has more than 100 offices in the states of Washington, Oregon, Idaho, and California, and over 3,000 broker associates. It's a family-owned company that this year celebrates its 95th anniversary. Lennox, welcome to Real Estate This Week.
Well, Stephen, it's just a joy to be back together with you.
I am so glad you could join us. So first of all, Lennox, how's it going in the Pacific Northwest?
Well, we have a phrase at the beginning of each year, and that is, it's another great year in real estate. Here we go. So we have our 2026 housing forecast, and we forecasted that we were going to have an uptick of intensity for new listings right after the first of the year. And although we had a little slow start in January, because just the way the holiday fell of New Year's Day, we totally made up for that in February. And year to date, we're back in the positive again. February's up 10% in transactions over last year's February. So very good news.
That is wonderful news. And that brings me to a big question. You know, Lennox, you've been in this business for a long time, but many people, even those who are in the business, might not realize that every year real estate follows a cyclical path month after month. Can you explain that to us?
Yes, there's a couple items in that. First of all, last year, the market went through an adjustment. On March 21st of 2025, the tariff talk took place. And that changed the market. The market went through a market shift, and we came off a frenzy market back down to a strong market. But that transition changed. When you come off a frenzy market, multiple offers come off, and therefore premium pricing comes down. And prices came off 10% in Seattle and 5% in Portland and surrounding areas on that day. But it takes 6 to 9 months for the whole marketplace to adjust prices lower. And we've completed that phase. So we knew entering year 2026, we were going to be at the new basis, the new pricing from the adjustment we went through in 2025. And at the same time, interest rates came down from the mid sevens down to 6%. And they actually hit 5.99%. So interest rates are down 1.5 points. The prices have adjusted, and that's really set the foundation for year 2026 that we're seeing moving forward.
Interesting. And so, Lennox, a question about you. When you hear the news about something like the tariffs and their effects on the global economy, do you pretty much know what that will mean to real estate? I mean, I know you're not a person to guess. You have the data.
We sure do. We know within a week, based on the number of pending transactions, the number of listings coming in. When that took place back March 21st, there was a surge of listings that came onto the market. And the public knows when they feel the market slowing down, that buyers are taking a little pause in the market. They know, boy, let's get our home on because we want the March 1st price. Well, that was no longer available. So they had to go through price reductions. But that extra inventory came on, just threw the market even further into what's the real price. And that's when we came out and we said, the list price is just the asking price. Here's the new market price for today. And so that we can negotiate our buyer broker, our buyer rep representing our buyer, to negotiate with that seller rep and the seller of what is today's market price. knowing that it has to get negotiated out because the seller wants their price, market price is a little bit lower. But then it comes down to where does the seller want to move? What's their reason for moving? Can they buy right at their new destination location? And if they can buy right there, they can sell right here and be in motion in the marketplace.
Interesting. And Lennox, tell us, what happens to real estate sales, real estate inventory, and what happens to buyers and sellers in a typical year, month by month?
Well, we have a trademark phrase called 6 seasons to the yearly housing cycle. And I'll just quickly go through the 6 seasons. We have the New Year kickoff, that's January, February, then the spring market, pre-summer, summer, fall, and winter. Each of these seasons in the residential real estate is a 2-month season. And it really follows the pattern of when new resale listings come on the market and also the number of homes going under contract. For example, the New Year kickoff. January 1st is the low point of unsold inventory because we went through the winter market with a very low amount of new homes coming on the market, plus sellers taking their home off to reposition in the spring. So we start the year at the low point of unsold inventory. But then in January, February, very few homes come on the market, but there's a surge in buyers after the holiday. That 2-month pent-up demand of buyers come through. So therefore, any listing coming on in January, February gets a higher level of sales activity intensity for homes going under contract the first 30 days. And that lasts into the spring market. That's where we're heading next, March and April. We're going to see an uptick in the number of new listings coming on the market. We're going to see that continual enhanced increase of sales activity intensity. That's another trademark term for Lennox Scott. What we track for new listings going under contract that first 30 days. But then we get to pre-summer, May and June. And that's where the biggest number of homes come on the market because it's around schools. Families start anticipating their kids getting out of school and they're in motion. Let's move to our next destination or within the local market. And we get that surge in listings. But at the same time, a key indicator for real estate is when there's more listings coming on the market, that means there's more buyers in the market. And so we just see the highest number of transactions take place in May, June, July, August, those 4 peak months over the summer.
And in the fall, do things start to slow down again?
Well, we come off the pinnacle of number of new listings coming on in that September, October timeframe. Still real good buyer activity. People want to get into their home, those around school, get in August, September. And then we see good activity through October for that. But then we know the selection is going to be slow for new listings for the next 4 months, that November, December, January, February. So we see buyers seeing a home that they like, knowing there's going to be very few coming on over the next 4 months. So we get some good activity over that September, October timeframe.
Interesting. And Lennox, I ask a lot of realtors the question, when is the best time to buy a house and sell a house? And they typically say when it's right for your life. But let me ask you this, based on what you just told us, is there a better time of year to buy and a better time of year to sell?
If you're just doing one or the other, the best time for homes going under contract would be the first 6 months of the year. For buyers, it's probably from May on, because you see an elevated number of homes coming on the market, an increased level for that. But if you're both buying and selling, it really does come down to when's the best time for you. Because it's okay to buy and sell within same market timing, because you're buying at the same time in the same market with interest rates, with the supply, all that, as you're selling at that same time. So we do have that statement that it is okay to buy and sell within same market timing. If you're moving out of town, find out what's going on in that local market area in the price range that you're looking at, because you're going to be able to buy right there and then put your current home on the market and sell right there and get yourself in motion. By doing the math, it's basically the same net seller asset equity no matter what time of year you're in when you're both buying and selling at the same time.
Real estate parity. I think you've called it that before, in which in a market, if prices go down and you have to sell your house for a lower price, okay, but you can still buy a house for a lower price. And the same is true if prices go way up. You might get a lot of money for your house, but you'll have to pay a lot of money for your next house in the same market.
That's right. And that's taking a look psychologically. Okay, it is a good time to move. I know how to position my current home so I could get in motion. Because what are the reasons why you're moving? To get closer to family and friends, for health, just for environment or life event, all those things come into play. So this is a market that we're in right now where you can get your home sold and you can buy, you have selection for buying a home. This is a market where you can have an inspection, where you're not maybe paying premium pricing right now that we were before, and interest rates have come down from where they were the last couple of years. And that's why we're seeing the increase in sales activity at this time.
And so one strategy, of course, that we've discussed before is in terms of market parity, if you go to a different market, you can really do well, because if you sell high where you're living and you go to a market where prices are much lower, that can be a bonanza.
And that really comes into what's taking place in the local economy. We always look at job growth as the number one indicator to a strong market. So what you're bringing up is if there's good job growth in the area where you're located, you're going to be able to get a little bit higher price because there's more price support, upward pricing pressure. And if you're going to a market that's not seeing that job growth or flat, you can get a good price for that home. So there's a benefit in that. But on the reverse side, it can be different. You can be coming from a low generation of economy in your local market and moving to a high activity market in the same situation. One thing I want to cover, Stephen, is just by price range. We anticipated last fall that the mid-price ranges in every market, there's a mid-price ranges where up to 80% of the transactions take place. We anticipated and forecasted that there would be price increases this year. And that's in fact what's happening, especially the first part of the year. Because of the limited supply, the sales activity is brisk. We're at very strong. In a couple markets, we're at surge market. And that's way better than just healthy. And let me go over the scale. You have healthy, strong, very strong, surge, frenzy. So we're up to a very strong and surge market in many regions of our market area in the mid-price ranges. The luxury, close to the job centers, we're seeing good sales activity, and then it dissipates out as you get outside of the job centers. But what's really driving the luxury market is the wealth effect of the increase in the stock market value of the major tech companies. All those close to the job centers have that price support and upward momentum in the market taking place.
Lennox, a fascinating analysis on what's happening in the spring and beyond. And on the next episode of Real Estate This Week, we'll continue our conversation and discuss selling in the spring market. Lennox, thank you for joining us.
Well, Stephen, I appreciate the invitation each year to come onto your show, and I look forward to future broadcasts.
You're very welcome. Lennox Scott, Chairman and CEO of John L. Scott Real Estate in the Great American Northwest. John L. Scott Real Estate has more than 100 offices in the states of Washington, Oregon, Idaho, and California, and over 3,000 broker associates. It's a family-owned company that this year celebrates its 95th anniversary. Next time on Real Estate This Week, selling in the spring market. We'll continue our conversation with Lennox Scott, who tells us about the essential 5 steps every home seller needs to know. That's next on Real Estate This Week. And until then, I'm Stephen Gasque, and thank you for listening.
A brand new episode of Real Estate This Week with Stephen Gasque drops every Thursday. everywhere. And you're invited to listen, subscribe, and follow us. Just look for Real Estate This Week with Stephen Gasque. The best real estate strategies out there, just for you.